Hello, it's John Burford, and this is an introduction to my tramline trading methods, which I've developed over the last few years. I found that these very simple chart-based ideas can get me into some very nice entries on some trades and also some good exit positions. And I hope that they will help you in your trading. Okay, so let's get started. This is a chart of gold. This is the hourly chart. Now, I think most people are interested in gold, so I've used this as an illustration. So what is a tram line? A tram line is a line which joins significant highs and lows on the chart. And I'll give you an idea how I work this. The first task I've got is to find one straight line which will describe the various lows. This is a bull market, of course, it's going up. So I would be first looking for the major lows. There's a major low there. That's one there, but there's a lower one here. There's one there, there's one there, there's one there, and so on. So let me get my trend line tool working. I'll anchor it on there. That's the low, and let's see if I can play around with it so that it makes sense. Yes, I think it's about right. Yes, okay. So from this this significant low here, we have another low here. Had a launch. The market launched up and resumed the bull market in a stair-step fashion. You see how it's like zigging and zagging. That's what we call a stair-step fashion. It rallied up to here, had profit taking, of course, and it came right back down to the line where it hits support. Now support is really where the buying comes back into the market, and the market will reverse. It was falling from that point to that point. It met what we call support, and it rallied right back up to here, and it came back down to the line. So if you see that, that's another point of support. Rallied down to the line here and rallied. This is what we call a classic stair-step fashion of a trend line. So this is the classic trend line that I think we all know about in technical analysis. Okay, the market then made a new high last week of 1814, came down, hit the line again, and bounced off. Now the first rule of trading trend lines or tram lines is to, in a bull market, which this is to look for places to buy, which would be on the line. You'd be looking to buy here, you'd be looking to buy there, you'd be looking to buy there. That not quite a hit, that would be sort of half of a hit, and you'd be looking to buy here. So there's quite a lot of entry points there to get you aligned with the bull market in gold. Dangerous, of course, to buy up in these areas here because we've had sudden lurches down. So the smart way to play these markets is to look for the market to come down to the line and buy there. That way you can use good money management rules like my 3% rule, which is a very good money management rule. And in fact, if you have a large account, I would probably lower that to 1% or even less a risk on each trade. And I'll go into that in another video. Okay, so this is my first tram line. What I'm looking for, though, is another tram line which will enclose a significant period of trading. So let's do this. Okay, that gives me a line which I can drag over the chart like so. There's a possibility there, isn't there? Okay, right, we have a point here which is a significant high. This is very messy, I don't like that. This is a significant high. That's a bit of a miss. That's a significant high too. So that's a possibility. But I think I can, let me just expand this a little bit. There we go. I think I can find an even better one. So let's grab the line again and go up a little bit more and hit that point there. There we are. It hits these two significant highs here, that one and that one. That's very significant. And if you notice, all of the trading since this point here, or rather since this point here, has been enclosed by this trading channel here. Now that is important information for you as a trader. It means that when the market comes down to the line, that's a time to buy. When it goes back up to the line, it's a time to sell. Very simple. So that's what we call a line of resistance, where this line provides a brick wall for the market, if you like, and this is a line of support where it's like a trampoline and it bounces back up. Okay, now why did I draw this upper tram line here? That's a good question. The reason is because of this point here. Now that's, to me, a very, very significant point, and I'll tell you why. Because when we first drew this line here, I used that as my anchor point, and we found all these lovely touch points along the way. That, to me, is a very valid tram line. So I'm looking for a parallel line to this, which would intercept a very significant high. Now this high here is significant to me because it occurs before this low here. So if I've drawn my tram line, my first tram line, which is this one, I go back in time to find a significant high, which would be that one there. The first significant high is that one, and very often that one gives me my anchor point for my upper tram line, which is this line here. And sure enough, just like magic, it stops these rallies here in its tracks. Okay, that's how I draw my second tram line. Now, if we look over to the right of the chart, we're still long, by the way, because we've been buying anywhere along here. Even here we've been buying, because so far the channel is held. All the trading is taking place in this channel here. Now what I'm looking for, I do specialize in these, by the way, but not everybody does. I look for breaks in tramline, and I'm looking for a downward break, and I'll tell you why. Nothing to do with tramlines here, is because the market has respected this line here, and if we're in a solid bull market, then I would expect these highs to reach this tramline here. Now the fact that this point didn't reach anywhere near this line here indicates to me a weakening of the trend. That's one clue. I've got other clues, but that is one clue that the trend is perhaps getting a bit weaker. What I need to see from this bounce here is a move above this point here, aiming for this line here. Now the fact that I didn't get it has put a significant question mark in my mind. Will this tram line of support hold? Well, I think we know the answer to that. We'll expand the chart to here. Okay. Now, right here, we see a first chink in the armor of the bull market in gold. It moved down, rallied back up, couldn't hold, and has fallen away from this line here. That's my second clue, that the trend has probably changed in gold, at least on the short term. Now, the value of tramline trading, there's another value to it, by the way, is that it can give you a target for where the break is likely to end. Now here we've had a break of an upward trend. We've got a move down. Now where is this move down likely to end? Well, it's likely to move to the next tramline, and to construct that tramline I need to grab my line generator here, grab it and just eyeball it so that it is equidistant to this line and that line. In other words, the gap between those two lines should be equal to the gap between those two lines. That's the criterion. Right now there's no trading at all in this channel here, but now because of the break there is a significant amount of trading in this channel for the first time. This is significant. And you see here that the dip stopped right on this third tram line, my lower tram line. It's like magic, isn't it? So once I suspected there was a break of this line, I could project where the market would bounce from. It's that point there. So using that knowledge, if we could short this market here, we could take profits in this area here. That is very, very useful information. So what I do always when I have a pair of tram lines which I trust, which is I did in this case, of course, I could draw my third tram line so that if this central tram line broke, then I could project my first target. That is very, very important information. And if you only take one thing away from any of my work at all, I would recommend you pick that piece up. Okay, and the other clue, of course, is the momentum down here. Now, I'll be discussing momentum in another video, but when you see a very, very low momentum reading here, like here, it's a clue that the market is ready to bounce. There's only so far that the momentum will carry. In other words, there's been a lot of selling here, it's been overdone, and now we're ready for a bounce, and that's exactly what we've got. Okay, so those are the important points to note from my tramline methods. Now, I have an advanced video where I will show you some more advanced methods of using tramline trading, and that'll be in the next video. All right, thanks for watching, and I'll see you in the next video.